All right. Well, good morning, good afternoon, or good evening from whatever you're joining us. We had a technical difficulties at the start, but this tends to happen. I'm Valentina, marketing manager at 3 Degrees, and we'd love to warmly welcome you to our first Climate Day. This is a full day of virtual events focused on empowering businesses to take meaningful climate action. And the event covers European, North American, APAC markets, catering to a global audience. Just an hour ago, we kicked off the event with the APAC session, and now we will move on to the European perspective on renewable energy trends and strategy. A few housekeeping rules. We are recording the session, so don't worry if you cannot make it until the entire time. We will be sending out those recordings too. Please use the Q&A chat box to ask your questions because we will have time toward the end to address your inquiries. And throughout the discussion, we will be launching 2 polls, so we are welcoming your insights. Okay, so a little bit about 3 Degrees. 3 Degrees is a global climate solutions provider, and we make it possible for businesses and their customers to take urgent climate action. We do so through a suite of climate solutions tailored to each client, such as procuring high-quality environmental commodities worldwide, providing expertise and support with renewable energy procurement, and setting climate targets. Now, headquartered in the US, we have over 20 years of experience in different markets. We have colleagues all over the world and offices in different regions, as you can see in this map. That all to serve our customers globally. I am also happy to present our amazing experts and speakers of the day for the European market. Nasos Troupakis, he is Power Markets Director in Europe, and Cristina Vitale, Senior Consultant of Power Markets team as well. And with that, I'm happy to hand on the mic to Nasos.
Thank you, Valentina. Hi, everyone, also from my side. Welcome to our first ever Climate Day and the European session of it. Before moving forward, a few words about our Power Markets team that supports clients worldwide addressing Scope 1, Scope 2, and Scope 3 emissions. We offer services starting from assessing renewable energy options all the way to procurement and implementation through gas purchase agreements, physical and virtual PPAs, PPA aggregation, as well as supply chain solutions. So what do we have in store for you all today? We'll present some key trends in the European energy markets on the overall market dynamics and the policy landscape. Then my colleague Christina will present viable renewable energy options and how to, let's say, evaluate those, and some key trends also there. And we'll foreshadow a bit what comes with our global market insights report later this month. Before diving deeper, and as Valentin already mentioned, would like to take a first poll to check everyone's experience with the topics that we'll cover. So please respond to the question that you have in front of you on your familiarity with the current trends in the European renewable energy market, or whether you're very familiar, somewhat, or not very familiar. We'll wait a couple of seconds, so please fill in your response. Okay, it looks like a pretty equally distributed audience here. 33% very familiar, 40% somewhat, and 27 not so much familiar. So yeah, hopefully we'll have something interesting for all of you, regardless of your level of familiarity. And I'll start with, as I said, with some key trends in the European energy market. Let's start with wholesale markets. On the screen, you see 2 graphs with the evolution of wholesale power prices and natural gas prices across several European countries. starting with the left, with power. In the first half of 2024, we saw the trend of price decrease and price stabilization across several countries, which was somehow overturned in the second half of 24 and beginning of 25, where prices increased, mostly underpinned by gas-fired electricity generation in countries like Germany, Poland, Netherlands, and the UK. The Nordic countries were like substantially lower. You see on the graph Sweden and Finland being quite lower than other countries, benefiting from renewable and nuclear output, as well as pretty robust hydro cycles. An interesting case is Sweden, that in Q4 saw a sharp increase in prices. That was mostly because of hydro output in the north that would not be transported in the south due to transmission constraints. A similar case in Finland that in the summer of 24 had a sharp decrease in prices driven by nuclear plant coming online and some constraints in transmission. So all that to say that dynamics between renewable energy generation, demand, and cross-border capacities are very intertwined across European countries. Looking into the natural gas on the right-hand side of the slide, European prices climbed in the end of 24 and especially in the start of 25. Last month, February, natural gas prices reached their highest level in 2 years. This is, of course, well below the record prices that we observed after the invasion in Ukraine, but still it's nearly twice the average of the pre-crisis levels. Supply constraints also in natural gas paired with more harsh weather conditions following 2 consecutive mild winters led also to significant outtakes from storage reserves, which were at 39% capacity last month. Moving on, a trend that we see specifically in electricity market is the occurrence of zero and negative prices. Here on the screen, you see a graph with a number of zero negative price hours across many countries in Europe. Between 2021 and 2024, as you see, we have a sharp increase in the number of zero and negative price hours. For instance, you see Germany at the beginning, at the left, extreme left of the graph was, let's say, leading this race in 2021. It was soon overtaken by other countries. In Finland, the number of negative hours skyrocketed from a few dozens in 2021 to more than 800 in 2024. And in Spain, negative prices were not allowed until end of 23. And within a year, it reached almost 800 hours. The factors leading to that are primarily renewable energy generation and demand patterns. On the countries that I mentioned, so Finland and Spain, the renewable energy generation follows the weather conditions. Spain is mostly solar, Finland is mostly wind, which push prices low during high solar or high wind generation. At the same time, these 2 countries have low demand during off-peak hours, which is also a factor pushing prices down. Germany and France, that we also see on the graph, have similar characteristics, but also some particularities with being central countries in the European transmission grid, faced with constraints where flows cannot go cross-border, and also having specific support mechanisms for renewables, such as feed-in schemes that also bring more renewable generation at times where prices are low. So negative prices are becoming more and more a factor to consider in the markets in Europe. The way to face this, well, the overarching, I would say, title is to tap on the flexibility potential that we have in the markets and the systems. There's not, let's say, one single answer to that, but rather a multi-phased strategy. On the first one, we could see an enhanced role of demand-side participation here, both for industrial and commercial consumers in adjusting their load. The second is by bringing more storage and scaling the solutions there to absorb excess energy during oversupply and release it when it's profitable. And the last way to face the occurrence of negative prices is through modernizing transmission and distribution grids to alleviate constraints and allow for more efficient energy flows. Now, with these observations in the market, on top, we have quite some interesting developments on the policy and political landscape, I would say, on national level. Here are some key countries that we find very interesting developments. In Germany, last month, there were the elections, and there's a new coalition government to be expected. While we don't see the country, let's say, rolling back its climate targets, there might be changes in the strategy on how and how fast to achieve those. In France, also the political landscape remains somehow fluid. A key development of this year is that the program for access to renewable energy at the fixed price is expiring at the end of 2025, which might boost some CPPA activity. Also, the governmental auctions have been generally oversupplied, but with general political and budgetary concerns, there might be uncertainty on whether these will continue. Speaking of auctions, that's not the case in the UK. CFD auctions remain strong, and we expect a new round later this year. In the UK, there's been already a few months with a new government in place that has announced ambitious goals and, in principle, limiting the ban on onshore wind, which might, let's say, move forward the corporate offtake activity. That being said, PPA prices remain amongst the highest in Europe. Last but not least, Italy. There we have more changes in the market rules. Since the beginning of the year, zonal settlement is introduced. However, the former national or PUN price is still being published as an index and used by several project developers. At the same time, the Italian TSO Terna has signaled that they're proceeding with significant investments into the system that might alleviate some constraints and perhaps bring some price convergence between the different zones, particularly north and south. And one level higher on the, let's say, overall EU landscape, in early 2025, the European Commission released what is called the Competitive Compass, which is, let's say, a set of priorities to boost EU competitiveness in a sustainable way. This comes as a follow-up to the Draghi report, which was published in the summer of 24 and explored ways for boosting innovation and increasing competition. The Draghi report recommended three key priority areas that these are fostering innovation, accelerating decarbonization, and enhancing security and resilience. A couple of weeks ago, on the 26th of February, the European Commission published a set of documents, policy documents that will affect the renewable and sustainability landscape of the Union. The first one is what's called the Omnibus Simplification Package, which still remains to be confirmed by other legislative bodies, that these are the Parliament and the Commission, but it has the overall objective of simplifying reporting and reducing the scope of several rules. It touches upon the Corporate Sustainability Reporting Directive, CSRD, cross-border adjustment mechanism, CBAM, the Corporate Sustainability Due Diligence, and the EU taxonomy. So overall, the package, as I said, reduces reporting obligations, limits requirements, streamlines CBAM compliance, and modifies EU taxonomy rules. The second part is the Affordable Energy Act, which has 8 action points for keeping energy prices low. I won't go through all of them, but under this act, PPAs are recognized as a key tool for de-risking renewable energy projects and offering long-term offtakes. And the last point is the Clean Industry Deal that focuses on the competitiveness of EU industry and especially energy-intensive industry towards reaching also the climate targets of 2050. And some key, let's say, takeaways are the significant focus on electrification with a KPI of 32% electrification by 2030, and the mobilization of 100 billion euros through the European Investment Bank for funding of clean manufacturing in terms of both CapEx and OpEx. And with that, I'll close my, let's say, presentation of the overall trends in the European energy markets, and I'll give the floor to Christina.
Thank you, Nasos. Hi, everyone. Very nice to meet you. Before entering into the viable renewable energy options in Europe and evaluating the latest trends in the market, let's poll again. So we are very curious to know the following from you. You should see the question on your screen. Have you assessed your options for renewable energy procurement? First answer, yes, we have a clear strategy in place. Second, we have explored some options, but need more clarity. And third, no, we're just starting to evaluate our options. So we'll give you some seconds, and then we will comment together the results. Okay, time is over. Let's see the results. Okay, we're happy to see that, yes, you have a clear strategy in place. Some of you have explored some options, but need some clarity. And some others, they don't have any options evaluated yet. So for those of you that still needs more clarity and are starting to evaluate renewable energy option just now, the next session might help you define your strategy and giving you some context on what's happening in the market. So let's start with viable renewable energy options. Generally, we can divide renewable energy sources into contracts that delivers to buyers the energy attribute certificates only, and contracts that delivers both energy attribute certificates and the electricity procured together. Under the EACs only contracts, of course, we find the certificates market. And for Europe specifically, we are talking about guarantees of origin for AIB countries and renewable energy guarantees of origin specifically for the UK. Then we have also some specific local geo markets such as Poland and Romania, of course. Direct contracts also fall into the EAC only category with different options such as virtual PPAs, which are pretty common instrument in the European market already, and also some innovative solutions such as the EAC only PPAs. An EAC only PPA is still a long-term contract, but differently from the virtual PPA, here the buyer takes no risk on the market component, so there's no contract for different structure, and they only fix the price of the certificates for the entire contract term. So it's an interesting solution because as per PPAs, EACs come from specific assets, and these assets can be either operational or new plants. So if you want, there's still the additionality component available for this option. Moving on into contracts with EACs and electricity procured together, there are solutions that involve the suppliers and physical delivery of the electricity, being physical/sleeve PPAs, which still have the additionality component, but also the basic green tariffs, which back the electricity consumption with unbundled certificates, in this case for Europe, GOs or REGOs. And finally, for those buyers that are interested in lowering their electricity consumption, on-site solar is a valuable option and can be implemented either owning the installation or engaging in different price structures such as leasing or on-site PPA. Now that we have clarity on the options available in the market, how do we know which is the best one for us in order to meet our needs? So in order to define a renewable energy strategy, we generally suggest corporations to first perform what we call the renewable energy options assessment, where we analyze the different options available in the market and we evaluate their attractiveness based on a set of criteria that we have already agreed with the client at the beginning, but that generally looks like what you see in this slide. Per each renewable energy option, we analyze impact, cost, risk, timing and scalability, and complexity. Under impact category, of course, this is linked to the additionality factor of the selected option, meaning are we adding new renewable energy capacity into the grid by implementing this option? And this question is very important for those buyers that have additionality requirements into their renewable energy strategy. Moving on cost, here we generally compare the projected cost of the selected renewable energy option with the client's business as usual scenario or other renewable energy options available in the market. On the risk side, we try to cover both market risk exposure in terms of cost, but also reputational risk. And we try also to evaluate if these options can somehow be mitigated. Timing and scalability. Key questions here are we able to meet our goals in time with the selected options? And additionally, is this option scalable? For example, if a corporation has plans to expand or increase their load, this is an important question to be addressed as well. And finally, complexity, as renewable energy procurement involves different stakeholders in the process, which are the ones that, in the end will support the implementation of the renewable energy option and give the green light to implement that option. It's important to understand if they if they understand and comprehend the benefits and the risk associated to this renewable energy option. And also, is the management process something feasible for the company to do? Or especially for those corporations with spread load in Europe, it's also important to understand how many solutions are needed to be able to meet the climate goals that we have set internally. So in order to help you understand what is the best option, we would like to share with you some market trends, especially on two main renewable energy options, which I would say they are the most used in the market already by different corporations in order to meet their targets. And we are talking about certificates market and the PPA market. So starting with the certificates market and starting with the GEOs market, as you can see from the graph, we've seen a huge decrease in prices over the last couple of years. And for 2025, the market is still expected to be oversupplied, mostly due to unsold auction volumes from subsidized plants and a general preference for buyers to prioritize older vintages consumption, basically because the GEOs market is in contango, and so it's less expensive to procure to use older vintages GEOs. This is, of course, accumulating GEOs in the market and is expanding the oversupply in the market. But supply and demand dynamics might always change. Weather conditions and reporting rules are key factors for changing demand and supply. On the REGO side, prices are also experiencing a downward trend following the reduction in buyer's green commitment after the price spikes that we have registered in 2023. Basically, buyers decided to do a step back because the prices of REGOs were very expensive. We see no significant price increase expected for this compliance period, which is ending in April this year. But market sentiment might strengthen later on in the year, with some buyers taking more green positions now that prices have come down. Moving on, PPAs. 2024 has been another impressive year in terms of renewable energy capacity and deals signed under PPAs, surpassing 2023. We are gradually shifting towards a buyer's market after several quarters in which sellers had quite some powers in PPA negotiation, I would say. Solar keeps being the leading technology, with most of the volume, of course, coming from Spain, but followed by Germany and the UK. However, we start to see buyers' interest shifting into other markets and other technologies due to the strong saturation of solar and increased cannibalization risk, which affect in the end the project financials, as you can see in the PPA values on the chart. Wind is becoming the preferred solution as it ensures more stabilized capture prices and indeed higher PPA values. Both developers and buyers are starting to look into hybrid solutions, and we've seen more and more solar plus wind offers in the market, especially in those markets which are very saturated, such as Spain. Finally, in terms of PPA prices, solar prices have generally stabilized in most of the European markets, following a halt in the decline of PV solar module prices. For wind, instead, prices have slightly decreased, possibly due to improved supply chain and ease of permitting constraint that really have been affecting the wind markets in the last couple of years. This was my last slide. So what's next? We are very happy to announced that by end of March, we will release our global market insights report. So basically, all the information that we shared today and more will be stored in this amazing global market insights report. And we are not only going to talk about Europe, but also Asia Pacific and North America. So take the advantage and subscribe today to be the first one to receive it. Thanks a lot.
All right. Thank you so much, Christina and Nasos, for your insightful sharing of everything that is happening in Europe. I think this is a great time to address those questions that were coming through, and I'm happy to read the first one. So the first one is, do you see initiatives or developments in contract structures or regulations that may limit the impact of negative prices?
Yeah, I can take that. Thanks, Valentina, and to the person for posting that. I think, in terms of overarching market rules or regulations, there is a focus on grid modernization and flexibility, but naturally those, let's say, need some time to mature, and these are complex changes in rules. So while we expect that they will come into play, they might not change all the dynamics in the short term. What we expect in the short term is for storage solutions to get a more increasing role in let's say limiting the effect of negative prices. In terms of contract structures, the storage solutions come into play, and we'll see it reflected in more and more deals being structured. But this is something that is still growing, I would say.
All right, there's another question. Thank you, Nasos. Could you kindly explain again the prices meaning in the PPA slides? Just we can go back to that slide and
yeah, I can take it. We can go back to the slide.
There we go.
Exactly. So these prices that you see here are what we call implied EAC values. And basically, it is calculated with calculating the settlement for the year, the contract term of average PPA price that we see currently in the market, discounted with an as-of date and a discount rate. So basically, this can be viewed as PPA values between what we see the PPA prices in the market right now and the forecasting curves that we are using for the next 10, 15, 20 years, depending on the contract term. And so we see that what I was saying generally, that due to cannibalization, the forecasting are expecting lower prices, lower capture prices for solar, while wind still is considered like a more valuable technology because it balances the capture prices. So, hope it's clear.
Perfect. Thank you, Christina. Okay, there are more questions. So the other one is, what would you advise to keep an eye on in 2025 in terms of all the developments and trends?
Yeah, maybe I can take that. I think, as we showed in the first part of our presentation, right? So we see some dynamic shifting also in the wholesale market. So I would say, let's say, just keep an eye on those, just see how, let's say, the winter will progress, and also the next months in the year. On the overall policy landscape, we don't expect, let's say, the overarching EU climate goals to change in the short term. We see, let's say, in spite of some simplification on some sustainability rules and that causing some concerns, we don't expect that the overarching goals will change drastically. And as specifically to the PPA market, I'll just take the thread from the slide Christina showed. Our advice for buyers would be to leverage the market dynamics, so that what is a buyer's market or starts being a buyer's market. Look for the most attractive solutions in terms of locations, but also in terms of projects and in terms of structures, look for some innovative solutions. I mentioned, for example, the combination with storage, but also hybridization of structures with solar and wind. That can also be an interesting, let's say, alternative for buyers to look for.
Perfect. Thank you so much, Nasos. We do have, I just want to encourage everybody again to type your questions in the Q&A chat box. If you still have any inquiries, we have more questions coming in, so please feel free to add those. The other is, how will you advise corporates to proceed with renewable energy procurement? Where should they start? What should they look for?
Well, it's a bit what I explained in the slides, but basically set up your goals, engage with your stakeholders because they will be involved in all the process of implementing renewable energy strategies. So they need to understand as you what are the risks, what are the benefits associated with the renewable energy options. You really need to evaluate all the options using the evaluation criteria that we have showed in the slide. There are many, but these ones are the most used, I would say. And so screen and scan all your options based on these evaluation criteria. As said, 3 Degrees is also giving this service, the renewable energy options assessment. So we are happy to support you here.
Amazing. Thank you so much, Christina. I think we have time for a few more. The other one is, do you see Regos recovering back to the £2-3 region, or has buying interest died out? What's your opinion on this? There's 2 questions in this one, so we can start with the Regos one.
Maybe I can take that one. So I think, let's say, yeah, prices are being low. With that, there might be a chance that interest is growing again with the cheaper price might bring supply back. Also, I mentioned the new allocation round for CFDs that might also change the general sentiment. So yeah, it's a bit difficult to judge whether this will remain like that or dynamics will change in the future. So we just need to sit and observe for now and just see how, I think, especially with the allocation round in the summer, that will probably play a role.
Thank you, Nasos.
Yeah, sorry, go ahead with the question and then I will take it.
No, it was just more like a follow-up for Geos, but if you want to still cover Regos.
No, it's fine. Let's go for Geos.
Great. Okay, so on Geos, is the price deemed to stay consistent throughout the year, given strong Nordic hydro and auction volumes, or is there a chance for recovery?
Yeah, so basically, as the Nordic hydros is available, the oversupply market is there. But I think a key thing to consider here is regulation. So if we see, for example, reporting rules being more stringent, so having like a yearly match of geos with consumption, we might really see some increase in prices and buyers forced to buy not the oldest vintages, but the vintages of the consumption year. And so this might, of course, increase the price because we won't have this oversupply problem that we have currently in the market. So it might be.
Perfect. Thank you, Christina. And based on that, is the European, like the whole renewable energy landscape, after we've seen the trends, there's another question that it says, is the European PPA market still an attractive option for corporate buyers?
Yeah, I can start with that, and maybe Christina, you can chip in. Uh, I would say yes. Activity, as Christina mentioned, activity remains strong. For 2024 close with significant record numbers again. And on the map we showed you, like, the guiding principle is the less red the better. So there were some countries that were like in the yellow or even green. So there are some opportunities. Activity remains strong. I think Germany, Spain, and the Nordics lead the race here, with most deals and volumes installed. That being said, market saturation and price cannibalization are real. Capture prices are changing. So buyers should be mindful of these dynamics. We spoke about negative prices, wholesale market fluctuations. So buyers should be mindful of those and let's say choose wisely and weigh their all these factors in before proceeding with the deal.
Yeah, I agree. I would only add that if you are a buyer that has load in different markets globally, the European market still is the most attractive one. US market at the moment is facing some challenges, as you all know, and APAC market is still in development for some countries, and it's quite expensive. So I would say that Europe should be a focus for buyers.
That was a very positive note to end the session. Well, thank you so much both for sharing all your insights. Just a reminder to please subscribe to get the Global Market Insights report, where you will get more of those insights and into other regions. So this is Climate Day. We will have more sessions throughout the day, North America, looking at supply chain, all of that. So please stay tuned, and thank you all again for joining us. And have a great day ahead.
Thanks a lot.
Thank you.
Have a lovely
Bye.
day. Bye.
Bye.